All right, welcome back, traders. John Caruso here in the morning of October 12th. We're doing a quick look-in on the market. Right now, the S&P 500, we've seen largely a lot of chop in the S&P 500 for the last three sessions. Right now, we're sitting right around 3605. That is down on the morning. We did see the release of the PPI number that came out this morning, 8.5% year over year. That is slightly lower from the previous reading, 8.7, but that is a very sticky high producer price index, and that, of course, that's not going to do anything to really move the needle in terms of the Federal Reserve. So S&P, I do have that level, or the downside level, starting to fall out right now on the chart. If we take out 3580 in the S&P, we're going to look for that, we'll call it the puke out level, potentially back to 3518 on the S&P 500. So 3580's got to hold. Otherwise, we're going to look for that plunge that could take us as low as 35.18 here over the near term, and I got a feeling that CPI is going to have a lot to do with whether or not we can hold those levels tomorrow. Taking a look at oil. Oil's coming in third consecutive session. I believe we're in the 87 handle right now. As long as oil can hold above 83, we think oil prices are still, this recent uptrend we've seen in oil remains intact. If we do see sustained trading below 83, then you're going to want to probably, bullish traders are probably going to want to take a more cautious approach, or perhaps neutral approach to crude oil prices here. However, we know that OPEC has sort of established a put underneath the crude oil market. We think that put is likely $80 a barrel. We know we've obviously heard of the monster production cuts over the last 2 weeks, which we think is going to keep oil prices elevated here at least through the end of the year. And then, of course, the United States has to refill the SPRs up. So it's going to be very interesting to see how that plays out. I still believe that crude oil, the uptrend, still remains intact. We're going to be keeping an eye on that. The other market we're watching right now is natural gas. We're trading right around 660 in nat gas right now. It does seem to be consolidating roughly right around that 200-day moving average, as well as the uptrend line that dates all the way back to last year. 630 on the downside has to hold in natural gas. If 630 can hold, I do think we can see price runs back up over $7. 706 would be our initial target. If we can get through 717, which is an old swing high from just a few days ago, we could see a larger upside target to 775 to $8 in natural gas before this is all said and done. So keep your eye on those two markets. Crude oil has to hold 83. Nat gas has to hold 630 for sustained price action above those levels and for higher price targets. So that's all we have here for you today. We'll catch you back here tomorrow after CPI. Best of luck to everybody out there. We'll talk to you later.